Good morning, guys. Welcome to my channel, Learn Accountancy with Prasad. Today, we will be discussing about a very important topic, which is bank reconciliation statement. First and foremost thing is what is the requirement or what is the need of a bank reconciliation statement. Okay. See, there are two kinds of recording which happens. One is the bank book which is maintained by the company. There is a bank book which is maintained by the company, and there is a passbook which is maintained by the bank. Okay. Now, whatever entries that we pass in the bank book, the company passes in the bank book, and whatever entries that are recorded in the passbook, there can be a timing difference. There can be a timing difference between the two. And when there is a timing difference between the two, there is a possibility that the balance as per bank book will not match with the balance as per passbook. For example, if the bank book shows a 100 rupees balance, the passbook can show a 90 rupees balance, or it can also show a 110 rupees balance. Okay. So the bank book and the passbook balances may always not match. There can be a possibility that the balances are different. The reason for such differences are mainly on account of timing differences, and it can be a recording difference also, some mistakes which can happen in the bank book, some mistake which can happen in the passbook. Now, as I mentioned, there are three kinds of record. One is the cash book, second is the bank statement balance, which is maintained by, which is also called as the passbook, and this is the cash book which is maintained. This is maintained by whom? This is maintained by the company, and this is maintained by the bank. This is maintained by the bank. So if the balance as per company's book is 100 and the balance as per bank is 90, or it can be 110, it can be higher end, it can be lower end, there is a requirement to reconcile this balance. So there is a process which is required, a reconciliation process is required to understand the reason for differences between 100 and 90 or 100 and 110. That reconciliation statement is called as bank reconciliation statement. Okay. Now, why prepare a BRS? As I told, to identify any errors. Okay, there can be a possibility that the accountant made a mistake in recording a transaction. Instead of 1,000 rupees, he debited how much? 10,000 rupees. A recording error. Unauthorized activity. Some fraudulent activity happening in the company. Someone has passed an entry for 1 lakh with unauthorized access. To ensure accuracy, to ensure that our bank book and passbook are always matching, to update the records. See, some transactions are directly debited by the bank, like the bank charges. Until we get the bank statement, we are not in a position to record such statement. So it is important to have a bank reconciliation statement done so that the records are updated and to strengthen control. Strengthen control from an audit point of view, bank reconciliation statement is a very, very important statement. The auditor, they get a comfort once they verify the bank reconciliation statement to ensure that the difference between the bank book and the passbook, there are proper reasons identified in the form of a reconciliation and documented. So it strengthens the control within the company. Now, common reasons for difference. Common reasons for difference. What can be the common reason for difference? First and foremost is checks issued but not presented. Checks issued but not presented. What does it mean, guys? Today is 28th of December. The company issues a check of 10,000 rupees. The company issues a check of 10,000 rupees. Now, When the company issues a check of 10,000 rupees, the balance in the books of the company will reduce by 10,000 rupees. Okay. Now, because of Christmas holidays and New Year holiday, the company, the check they have issued, the person who has received the check has not deposited the check into the bank. So what will happen? My bank balance before this transaction was 1 lakh rupees. If I reduce 10,000 rupees, it should be how much? 90,000 rupees should be the value. So I record 90,000 rupees in my bank book. But since the check is not presented, the person who has received the check has not deposited, my passbook still shows 1 lakh rupees. My passbook still shows 1 lakh rupees. So this is check issued but not presented. So what happens in this case? This is my bank book. This is my passbook. So in such case, my bank balance will reduce by how much? 10,000 rupees. But this entry is not passed in my passbook is not passing this entry at this moment. Whenever the check is presented, that is the time when passbook will record this entry. So what will happen? My bank balance will be, my book balance will be reduced by 10,000, whereas my passbook will be showing a higher balance. This is check issued but not presented. Second is checks deposited but not cleared. So what will happen if I receive a check of say 5,000 rupees? I deposit this check. My book balance will increase by 5,000 rupees. But because of the Christmas holidays and New Year holiday, the bank is not able to give credit to me before 31st of December. It gives the credit to me on 2nd of January. So my book balance will increase by 5,000, but my passbook will not have, this entry will not be there in my passbook. So my passbook will be showing a lower balance. My passbook will be showing a lower balance. On 31st of December, on 31st of December, bank has charged an interest of 1,000 rupees. So they have debited my account. My passbook has reduced by 1,000 rupees, but I am not aware of this bank charges. So I have not passed an entry. The company has not passed an entry. So the balance as per company's book will be higher by 1,000 rupees, whereas the passbook will be lesser by 1,000 rupees. One customer has given a check of 50,000 and deposited directly into my bank account. Now, what will happen? My passbook will increase by 50,000 rupees. My passbook will increase by 50,000 rupees. Whereas, since I am not aware of this transaction or the accountant is not aware of this transaction, the company has not recorded this transaction. This transaction will be recorded whenever the company sees the bank statement. That is the moment when they will be in a position to record this transaction. So what will happen, guys? The passbook will be having a higher balance, whereas the cash book maintained by the company will be showing a lower balance. Clear? Standing instructions, EMI, the company has taken a loan, the bank has debited an EMI of 20,000. So my passbook is reduced by 20,000, whereas this entry is yet to be recorded in the books of the company. So the company's book will be higher by, the company's book will be higher by 20,000. This is another reason why there can be a difference between the cash book and the passbook. Next is recording errors. Anyone can make a mistake. The bank can make a mistake in recording a transaction. The company can make a mistake in recording a transaction. Okay. Now let us talk about the format of BRS. The format of BRS is very simple. There has to be a starting point, guys. Whenever there is a reconciliation, there has to be a starting point. The starting point can be a cash book, which is maintained by the company, or it can be a passbook, which is maintained by the bank. Anything can be a starting point. Let us take this example of cash book as the starting point. Add items that increase the bank balance, add items that decrease the bank balance, and final what we will get the balance as per bank statement. If you start from cash book, we will reach at what? Bank statement. will reach at balance as per passbook. If you start from cash book, you should reach at balance as per cash book. Clear? Now let us take example one by one. Okay. Now, assuming the cash book balance is 1 lakh. Okay. Take the example of checks issued but not presented. See, when I issued the check, what happened? My cash book balance reduced by 10,000 rupees, but my passbook is showing a higher balance of 10,000 rupees. Checks issued but not presented. When I issue the check, I show my cash book as minus 10,000, whereas the passbook do not show this entry. So that means the passbook is higher by 10,000 rupees. Okay. So what we have to do, guys? What we have to do? This is 1 lakh minus 10,000. This is still 1 lakh. Okay. Don't remember it as plus and minus items. Just understand the logic, guys. Now my cash book has become 90,000. My passbook has become 1 lakh. So what I shall do to this transaction, to this activity? Now, if I am having a cash book, my starting point is cash book, which is 90,000. I have reduced my cash book, but the entry is not recorded in passbook. So what I have to do? I have to add, I have to do what? I have to add this 10,000 rupees. I have to add this 10,000 rupees from 90,000. My balance is how much? 90,000. Once I add this 10,000, it will become how much? 1 lakh rupees. Here, and my passbook was always 1 lakh because this entry was not recorded at all in the passbook. Okay, another entry, checks deposited, checks deposited but not cleared by the bank. So when check was deposited, what did I do? I recorded a transaction of plus 20,000. So my cash book has become plus 20,000, whereas this was never recorded in the passbook. This was never recorded in the passbook. So the passbook is lower by 20,000. Okay. So my cash book balance has increased by 20,000, whereas it was never recorded in the cash book. So what I have to do? I have to now reduce this item. I have to now reduce this item to reach at the passbook balance. So like that, you have to analyze each of the transaction and then have to do the treatment accordingly. Okay. If we start from cash book, we will reach at passbook. If you start from passbook, we'll reach at cash book price. Now let us take two illustrations which will make this concept further clear. Okay. Now starting point from cash book balance. We are taking the starting point from cash book. My balance as per cash book is 50,000 in this example. Okay. Now there is a check issued but not presented. Check issued but not presented of 8,000 rupees. Forget about the symbols in the left, guys. Checks issued but not presented. See, when I issue check, what will happen? My cash book will reduce by 8,000. This is my cash book. Since it is not presented, the passbook will not have any entry. So the passbook will have a higher balance of 8,000. So now to reach at the passbook balance, my cash book is reduced by 8,000. My starting point is cash book. Now I have to reach this balance of passbook. To reach this balance of passbook, what I have to do? I have to add 8,000. So once I add this 8,000 rupees, then I will be reaching at the passbook balance. Clear? Add interest credited by bank. Now bank has credited an interest of 1,000 rupees. Bank has credited an interest of 1,000 rupees. So my passbook has increased, whereas I don't see this entry in my cash book. Since the entry is not there in cash book, what we will do? We will pass an entry in the cash book. We will increase the cash book balance. We will increase the cash book balance. So what will happen is this entry, once it is recorded in the cash book, it will start matching with the passbook balance. It will start matching with the passbook balance. Clear? Checks deposited but not cleared. Checks deposited but not cleared. Okay, now I have passed an entry of 5,000 rupees in my cash book. But because of New Year holidays, the bank has not given the credit of this entry in the passbook yet. So my cash book is higher, which is wrong because my passbook has not recorded this entry. So what I will do, I will eliminate this entry from the cash book. So what I will do, I will reduce this entry from the cash book minus transaction. The next entry is bank charges. Bank has debited 500 rupees. I am not aware of this transaction. When I see the bank statement on 5th of January, I see that there is a debit of 500 rupees. Okay, so what I will do in the reconciliation statement, I am preparing this BRS on 31st December. So what I will do, so I have to reduce my balance by 500 rupees. Only if I reduce my balance by 500 rupees, I will be in a position to reconcile my book balance with the bank balance. So this entry will be reduced. So my starting point is 50,000. I am showing a 50,000 balance in my books of accounts. Bank is showing 53,500. Both the things are correct. The balance as per book is also correct. The balance as per bank is also correct. The reason for the difference is a check issued by us was not encashed. So we have to increase the balance by 8,000 rupees. So this is the reconciliation. There are four items which are causing this reconciliation, causing this difference. One is checks issued, which will be added. Interest created by the bank. Bank has created the interest, but we are not aware of it. So what we will do in the reconciliation statement, we will increase the balance by 1,000 rupees. Checks deposited. I have deposited 5,000 rupees check, but the bank has not given the credit of that 5,000 rupees. So what I will do, I will reduce my book balance in the reconciliation so that I can match the balance as per banks. Bank charges, bank has debited 500 rupees, but I have not recorded this transaction. So now I have to reduce the book balance by 500 rupees. Then I will be in a position to reconcile my statement with the bankers. And finally, after all this adjustment, what I will get 53,500. This should be the balance as per the bank statement. Clear, guys? Let us take one more illustration, guys. Illustration 2. Okay. Now be careful, guys. This is the balance as per bank statement. My bank statement balance is how much? 42,000. Now I am starting with a passbook balance. Now think from the banker's point of view. The balance is 42,000. Now checks deposited but not cleared, but not yet credited. I deposited a check of 6,000 rupees. So my cash book is higher by 6,000 rupees, but my passbook, there is no entry. There is no entry in the passbook. So what I will do now to reconcile this, since my starting point is bank statement and there is no entry in the bank statement, what we will do, we will add this transaction. We will add this transaction of 6,000 rupees. Clear, guys? Next is insurance premium. Next is insurance premium, which is not in cash book. Okay. So what bank has done? Bank has auto debited. Bank has auto debited what? Minus 1,200. In my cash book, this entry is not there. So what is my destination? My destination is cash book. My passbook is reduced by 1,200. To go to the destination of cash book, what I have to do? I have to add this 1,200 rupees. Once I add this 12, already bank has debited this. Whereas in books, it is not debited. So if I have to reach from bank book to cash book, what I have to do? I have to add this thing. Clear? Checks issued but not presented. Okay. In my cash book, I have reduced 4,500, but it never came to the bank or it was never presented to the bank. So my bank, there is no entry in the banks. Okay. So now since I am having a bank statement with me and this entry is not there, what I will do, I will include this entry. So I will reduce my passbook balance by 4,500. Okay. Now it will reconcile with my cash. Directly deposited by customer. Amount directly deposited by customer. So my passbook is higher by 4,500. This entry was never there in the cash book. Now we have to think from the point of view from a cash book. So since this entry is never there in the cash book, what we have to do? We have to, sorry, this amount is 3,000 rupees. So what we have to do? We have to reduce this amount of 3,000 rupees. Then finally what I will do? I will arrive at my balance as per cash. Clear, guys? So we have taken two illustrations, one from a cash book point of view, the second one from a bank book point of view. Okay. So this is how a bank reconciliation statement is prepared, guys. To summarize this, first of all, first starting point is identify the starting balance. In the first illustration, the starting point was cash book. In the second illustration, the starting point was passbook. Understand the logic. Understand what happened in the cash book or the passbook. Instead of memorizing this, understand the logic. It will be very easy for you to understand whether it has to be added or subtracted. Clear? You can use arrows to depict whether an item has to be added or subtracted. Instead of arrows, what we use added or subtracted. Both ways it will work as. Okay. In practice, in both the scenarios, what happens when you are given a cash book balance, what happens when you are given a bank balance. Okay. So this is in short about bank reconciliation statement. Have a great year ahead. Wishing you all a very, very happy new year, guys. Wishing you a lot of success in 2026. For more contents, please follow my YouTube channel, Learn Accountancy with Prasada, and my LinkedIn handle is by the name of Prasad Ramachandran. Thank you, guys. See you.